All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's the market movers for the 7th of August 2018. Time indeed does fly. Just as always, you see that small questions box. Please, if you happen to have any questions, put those questions in that box. Right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. And yeah, once again, please ask questions. I really love to teach, and I think you guys asking questions is really the best way to start and engage in that knowledge transfer process. So thank you very much, everybody, for the feedback that we're getting here. And yeah, today's session is scheduled to run for around about half an hour. I do my best to be not over time. And before we get started, you already see our lovely risk warnings and risk disclaimers. Please take a moment of your time to read through them and make sure that you're okay with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the instruments before you are getting active in the market. It's neither Trade with Position nor myself are investment advisors. Nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the main part of today's webinar. We will be looking at the markets together, those markets which are moving right now. Guys, it's just me explaining what I'm seeing on those charts. In the end, you have to own that trade, and owning that trade means you, for yourself, came to that conclusion that this is the perfect trade that you want to put on. And this is only something that you can do. Some random guy on the internet just telling you that he likes a certain market or not should never, ever be good enough for you to put on a trade. It's your money. You must understand what you do there, and you must arrive for yourself at the conclusion that that's my trade, I want to take it. So once again, everything that we do here is for educational purpose only, so please make sure you're okay with this. And we also do have the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Reading the first questions already, guys. Thank you very much for that one here. Yes, Jason has been asking. Jason, thank you very much, about our advanced technical analysis course. We have some slides covering that one because it's coming up on the next week. And yeah, you guys can definitely sign up for that. I will be bringing up those slides towards the end of the session, but Jason, definitely we will have you covered there. So what is today's agenda? Building your own trading strategy. We want to trade those markets using technical analysis, which is just looking at a chart. We think that a lot of information is already priced in. You already see, or the market reacts immediately upon all news that is available, and therefore just reading and looking at price action is already giving us a very good idea about where that market is and what it might be doing next. We want to have a strategy, which means we look for certain trade patterns or certain setups. And with backtesting, we want to identify and realize that this strategy gives us an edge. An edge means that hopefully we will have more potentially profitable trades on our hands than losing trades. There will always be losses. They are just part of the game. There is no, I'm searching and seeking that perfect strategy, which only produces 100% win rate, will not happen. It doesn't exist. Trading is all about probabilities. You want to have an edge. You want to have more potentially profitable trades than losing trades. And those potentially profitable trades should give us the opportunity to make more money trade by trade, with compared to what we lose on those losing trades. And those two things coming together is what defines our edge. And once we have that, I want to put on as many trades as I can, following that back-tested and strategy. This is how trading works. It's not every trade has to work. No, more in the end, more should work than not, and those which work should produce more profit than the losses from the other ones. So pretty much straightforward. That's it. This is how trading works, and we do this by technical analysis, looking at a chart and reading what price has been doing in the past, because we feel that those patterns tend to repeat themselves. Why do they repeat themselves? Because the behavior of market participants is pretty much the same. If you go back in trading literature or any kind of other literature, we human beings run along the same theme, the same thread, same topic pretty much since forever. So our actions are repetitive, and therefore also our actions in the markets are repetitive. And I'm seeing on those charts just the behavior of market participants. I can see how those people reacted in the past. And this is why looking at that chart makes sense to me. It's not a random price which is generated by some kind of random number generator or any kind of algorithm. No, it's the visible and observable result of people acting and trading in the markets. This is why we look at charts. This is why we feel that there is something going on. So without much further ado, let's just have a look at the live market right now. Sorry, this was one slide too much. And I want to focus today here on the forex pairs with the British pound. Why the British pound? We had this great Brexit referendum where the people in the UK said, yes, we want to leave the European Union. And now the politicians have to do something about it. And it appears right now they are not really perfectly doing their part and those negotiations. Think about it. This is a very large union, a large legal body. And now a lot of different details have to be sorted out. What about the rights where people may live? How do we want to organize trade between the remaining parts of the European Union and British Kingdom? And pretty much all this needs to be sorted out. And they have a tight timeline, and they should have some results, some showable results pretty soon. And they don't have something. And people are really getting nervous right now because London, obviously, one of the major financial places, and not just for that industry, but pretty much it's very complex, and they just don't have something to show. And people are really getting nervous. And this starts to show with those currency pairs here involving the British pound. Tradable here at Nadex would be euro against the British pound, cable, British pound, US dollar, and obviously also British pound against the Japanese yen. So let's have a look at those here and see what's going on. And you can see that the euro is appreciating in value here on this daily chart. Prices are shooting higher. We have been trending again. How do I know that this market has been trending? I look at my moving averages, and I can see that the 10-period moving average is above the 20, above the 50, above the 200. I usually always get this, especially with this good separation space in between them. We like to call this a fanning pattern. We only get this if the market has been moving in one direction for some time. And yeah, that was the case here. This recent pullback here, this was a little sign of weakness here. You can see that price pulled back. It didn't go immediately for a new higher high. Instead, small pullback, so small correction here. Those of you who might be interested in Elliott wave, I think I'm definitely no expert in this area, but you tend to see those ABC corrections, and I'm pretty sure this will qualify as an ABC correction. And now we're making here another move, and now we have made this new higher high. So you could be tempted to call this a wave 3, wave 4, and this could be wave 5. We will have to see how price will continue here, However, the weekly chart has been going higher for some time. You start to see this fanning pattern here as well. Price is going higher. And here also on the monthly chart, large run-up, sideways action now for a pretty long time. But again, you still see this fanning pattern. You still see that prices are trading above their moving averages. And therefore, this market here clearly is also still pushing higher and in an uptrend. So euro strong, British pound pretty weak. Let's have a look at cable. Cable, just the same story. Here, British pound is the first currency. So if the British pound is weak, we can see the price is falling. Here with euro British pound, prices obviously rose as euro was the first part in the currency pair. But here, the price for British pound in US dollar is falling. Now, same story here. What do I look at? I can see that my moving averages are in place. And I don't care, by the way, if those moving averages cross each other. Those are lagging signals. Lagging means you're late to the party. You just arrive when everybody is about to leave. Isn't fun in real life, isn't fun with trading either. I want to have an idea about what might be coming next. I want to use leading indicators. I want to use indicators that give me an idea about what is around the corner. I will never know for sure. And guys, even if I get the perfect setup here, I don't know if that trade will work out or not. That's just the nature of the game. And as I don't know if this trade is going to work out or not, I will not be in a position where it doesn't make any sense for me to trade with a huge risk on that trade. I trade very small with every single one of my trades. My trades must be comparable from a risk management perspective, because only then is that edge of my strategy able to manifest itself. It doesn't make sense for me to have 9 winning trades and then 1 loss, and that 1 loss wipes out all the gains from those 9 trades before it, and even then some more. That's just not my style of trading. It doesn't make any sense for me. I want to win in the same area where I lose. Preferably I want to win more. So I want to risk the same amount here pretty much in any one trade. Even if it was the most perfect setup, I know there is no sure thing with trading. Moving averages in place, fanning pattern, and you can see the price is moving down and pulling back. And this moving and pulling back, we like to call this here moving back to price equilibrium levels. The idea here is that price never ever moves in one direction and only that direction and forever. You always have this wave pattern again. And those pullbacks, this is where people are locking in some profits. This is where people are about to, a picture that we like to use here would be that of a rubber band, an elastic band. If you just hold it in your hand, it's in its resting position. There's nothing going on. But if you now pick that elastic band and pull it, you can feel that tension rising. And at one point, that tension is so large, and if you let it go, it snaps back to its resting position. And it's the same thing here with trading. You can see the price is moving away from its average. Price is mean reverting, which means price is always coming back towards its own average. And we use our 10 and 20 period moving average here for price to come or to help us to identify this area, this potential pullback area. And we can see this here happening over and over and over again. Huge move in the market, we're pulling back. Where are we pulling back to? To price equilibrium levels here in our 10 and 20 period moving average sell zone. And price is shooting lower and pulling back again. Where does it pull back to? In this area. Now, what's going on here? Price has moved away once more from our moving average sell zone. And now we think that price might start to pull back. If you intend to trade this pullback, you must understand that this trade back towards the moving average sell zone would be a counter trend trade, because obviously this market is in a downtrend. And what I really like about this chart here is that price, yes, yesterday price made a new lower low. And we can also see that just comparing here this value in MACD with where price or MACD is right now, we see convergence here. This new lower low in price is confirmed by a new lower low in MACD as well. Having convergence here is an important thing, an important theme, because if we see divergence, as we saw it here, huge divergence here, this is usually an early warning sign that something might not be quite right. It can continue, but I wouldn't have really looked towards taking a trade here in this area due to that recent divergence here showing up in MACD and also in RSI. How do I scan for that divergence? I just take the previous swing point low and I check what is the reading of my indicator MACD. I check what is the reading of my indicator RSI, and then I compare this with the next point in time where I made a new lower low. I can see that here I have divergence setting up. MACD made a higher low, and also RSI made a higher low at those same points in time. And this is why I would have been very reluctant to initiate a position here. Now, however, we see once again convergence, so any potential short positions have fewer warning signs attached to them. Let's put it that way. The idea here is now that price might be pulling back to counter trend trade, more risky. The safer thing, if there is a safe thing when it comes to trading, let's rephrase that. The thing which is, or the approach which should have a higher probability attached would be now to wait until we see that pullback happening. And then I'm looking for a small bearish candle setting up here in the sell zone to potentially initiate trade, a new short position here. Trading is a lot about, I know what I want to see. I don't see it right now, so I'm waiting. We call this stalking a trade, stalking a position. You lay low, you just wait for the perfect setup to happen, and then you take that trade. Many people think I have time now. I'm sitting now in front of my screen and I'm a trader. I have to trade now. No, you don't have to trade. Our job as traders is to trade only the very best setups that we see. And if I don't see that setup right now, I don't initiate that position. I wait for that setup to occur, and once it's there and once all the check boxes are ticked and everything is nice and dandy, then I put on my trade. I think that might be happening with British pound over the next few days. And guys, I'm always looking here at the daily chart. I'm cross-referencing and checking here, is what I'm seeing on this daily chart in sync with what I see on the weekly chart? The next higher time frame, yes it is, because obviously this is also a downtrend here. We see once again the fanning pattern and the moving averages. This is a downtrend, this is a downtrend here. The monthly chart here in cable, not so sure about it. Yes, we saw a downtrend here, but since then prices definitely pulled back, and you can see that price pulled back very deep. The 10 and 20 period sell zone has pretty much closed down. We even saw a small crossover here. I don't care about that crossover, but is this the perfect bearish environment that I'm looking for? Not quite. So daily, looking okay. Weekly, yes. Would I initiate a trade here now on the daily chart? No, because we are overextended on the weekly chart. I want to see that price is very close to those price equilibrium levels on 2 time frames. Because if I feel that price is sitting here in my sweet spot, but it isn't on the next higher time frame, then the idea is, wait a minute, we might still see a pullback here. I want to see that perfect setup on many different time frames. The best trade that I took, I think it was last year, I saw something happening on the German index, the DAX, on the daily chart. I didn't get the setup there. And I started to drop down with my time frames, and ultimately I took that trade on a 2-minute chart. I don't like to trade those time frames. I'm getting way too old, I'm way too slow for that. But 15 minutes didn't give me the setup, but it was there. It was in the sweet spot, but the setup for me finally occurred on the 2-minute chart. And 2 minute, 5 minute, 15, 30, 60, 120, all those time frames and the daily were in perfect sync and all screamed at me, I'm the perfect setup. This is what I'm looking for. And even if we were here in our sweet spot, no, we aren't here. And this picture also isn't looking that great. So let's move on here to British pound against the Japanese yen. What's going on here? Yes, it's a downtrend again, but just look, this is pretty much here. Let's just compare those charts here. What are they showing us? We can see that this market here pretty much is still in this range bound area, even on the weekly chart. We made lower lows here. This was a higher low, and currently we're still sitting at those levels. So weekly, not that clear, not that precise. British pound here on the daily chart. Yes, it's a downtrend, but just note how very recently only those moving averages crossed each other and we are now in our order. So I don't like that chart structure. We're still in that large range here. We could be approaching, we could be looking to see if we can identify any levels setting up here. Nothing really, something like that. It's just not good. It's just not attractive. Let's go back to British pound, US dollar. Much cleaner chart structure, much more appealing to me. Let's have a look again at Euro British pound. I feel that currently Euro British pound is probably the one which is most in sync, which is most in the direction and where the structure across the different time frames and the way that we're leaving this area now here probably makes most sense here. All right, so I have identified now those markets which are moving, and now how do I scan for a certain setup? Well, I got this positive environment. I see the uptrend, I see the uptrend, I see the uptrend. When I want to trade here with those Nadex contracts, yes, we do have options which go for longer expiry cycles like the weekly, but usually those option contracts are more shorter term in nature. So this sets the stage for me. I feel that the market here is currently pushing higher. We are a wee bit overextended here on the daily chart, but the overall idea and theme here is this market might be going higher. Let's drop down here with our time frames and have a look at an hourly chart. And you see on this hourly chart, same topic, same analysis applies. Fanning pattern, price is pushing higher. We're pulling back to price equilibrium levels. And once again, price is pushing higher. Now we're pulling back again. We're very close here to those price equilibrium levels. We could be looking to initiate a potential long position, maybe there. Let's drop down to 30 minutes, same story. And I hope you can see that the 30-minute chart here pretty much was very close, or is here very close to my moving average buy zone. And let's compare this just with the 16-minute chart. We're also very close here. This is what I meant before. I want to see that those time frames are very close to my buy zone, and that neither of them really is overextended. 15-minute chart, just the same story, probably would have been here. We're already starting to see this pullback here. My sweet spot probably for this type of setup would have been the 30-minute chart here. And guys, once again, it's not a trade recommendation. I just want to show you how to potentially transfer that type of analysis now into a potential trading setup using the Nadex platform. It's not a trade that I would place in my live account. I would do much more analysis here. It's really just for educational and demonstrational use. So let me just say that again. Now let's make it a little bit smaller. All right, so we're looking here at a current price of round about 89,535, and we have to look here at the forex binaries. We're looking at Euro British pound. So let's just check here the daily. Which expiry cycle am I shooting for? I'm looking here at a 30-minute chart. The idea here is that on this 30-minute chart, I have here 2 hours and 30 minutes going. This means I have 5 more candles to print until this contract here expires, until this expiry cycle becomes due. Let's make it like that. And so the question for me now is, do I think that my potential price target, or what I'm trying to do here, can this work out over the next 5 candles? If you think yes, then that might be the one. If you think no, I want to have more time, then maybe have a look at this one here. You see 6 hours, 34 minutes. So obviously this would be 13 candles now, and much more time to work out, but also much more time to screw up. Just more time for the trade to evolve. For this example here, I'm going back to my 2 hours, 33 minutes. Now, price is pulled back, and I think price has a decent probability of maybe moving higher. Which strike price could I consider for a potential long position here in this market? Well, I could now look at this position here, for example. Let's shoot for this one. I'm looking here at a strike price of 89.60, which is up here. Price has to move all this way in order to hit this level then and there. Remember, with binaries, price has to close above that strike price in order to have that payout of $100. If price closes at the end of this option life cycle at or below that strike price, that contract will settle for 0. So one contract here costs me right now $26. I have a risk now of $26 if I traded just one contract, with a maximum profit of 74. My reward to risk ratio is about 3 to 1 here. Remember, my edge consists of 2 things. I want to win probably more often than I will lose, and those potentially profitable trades should be larger than the losing trades. That second quotation, that second part of the quotation is perfectly met here. If I win, and it's a perfect winner in that case, full payout, my potential payout is $74 for those 26, for which $100 for the 26 which I'm paying right now. So you see the price is moving. Let's just, how many contracts could I consider? My demo account here, and I highly suggest that you guys get yourself a demo account as well to get used to those contracts and how to use the platform. $23,000. So how many contracts should I trade? I want to risk 1% of my account on any one given trade. So if this trade goes bad, I'm willing to lose $230. And you see how easy that Nadex platform makes it for us to apply proper risk management. I now just increase my position size until I see 236.8. That's too much. 206. Okay, 7 contracts it is. I know immediately my maximum risk. No matter what the market will do, that's the worst thing that can happen. And I'm just adjusting here for current prices. I'm just placing this order now. Again, it's just for demo purposes. The position is live. Now, how do I manage that position? It's either fire and forget. I just hope that at the end of those 2 hours and 30 minutes, we will see that price will close above this level. There's a certain probability for that to happen. Or what I could do is, no, I want to manage my position. Right now, I'm risking $230 roundabout. And I don't have to wait and settle this contract at expiry. I can actively manage that position. And what I want to do here now is I want to put on a limit order. And I don't want to close all 9 contracts. I just want to close 5 contracts. And I want to close them at a price of, I've been risking roundabout, I initiated that position at 23, let's say 24. I want to make 100% on those 24. So I'm willing to close my position at a price of 48. What this does for me here is I'm taking a 1-to-1 reward to risk ratio on half my position. This means I'm locking in as much profit as I still have risk on the table after this contract or that position is hitting its first profit target. For that reason, once price trades up to this level, I know that the price of this contract should be very, very close to 50. So shooting for a price of 48 is reasonable. Why should it be close to 50? Because an option contract, any option contract which is trading at the money, at the strike price, should have a delta of approximately 50. And this price here of those Nadex contracts can be thought of and interpreted something like delta of conventional options. So if it's trading at the money, price should be close to 50. Could be 40, could be 60, but something in that area, usually, rule of thumb. So that's part of my strategy here. I want to close that position, at least partially. I want to close 5 trades, 5 contracts here, once price is shooting up to this level. And for the remaining part, it's okay for me. I want to see what happens there. So you guys hopefully can see that it's not fire and forget. You can actively manage that position and yeah, pretty much apply rather sophisticated trade management strategies here as well. Huge advantage. And once again, I hope you can have seen how easy it was to apply proper risk management here. Despite my best intentions, we're already over time, so I'm pretty fast jumping back here now. I promised to explain a little bit about our Nadex Premium Trading Strategy course coming up just next week. What can you expect from this course? It's a 6-hour educational package presented by Trade with Positions expert traders, my colleagues and myself, over 3 installments. And we will do everything live here. You will once again have the opportunity to ask questions. And there we really want to focus on the technical analysis and building a complete trading strategy and then implementing that strategy from start to finish using those Nadex contracts. You see that trading here at Nadex has huge advantages. It adds some more questions to the game. The question is, which strike price should I be going for? Which expiry cycle? This takes some exercise. This takes some practice. We will cover that one as well here. The nice thing is you guys can get this course here absolutely for free. There is never anything that we guys want to sell you. It's free. Nadex has taken care of everything. If you contact us directly, you will see we will offer something as well, a course with approximately the same content for around about $900. Save that money, open your Nadex account, fund that account with those $900 that you just saved. You get absolutely the same content here, absolutely for free. You need a live account, you need a funded Nadex account to participate in this webinar. And yeah, I'm really looking forward to welcoming you guys. I think the first session is next week, Thursday. So really looking forward to welcoming you guys there again. All right. So guys, thank you very much for tuning in today. That's pretty much a wrap from my side, unless you do have any other questions which I can answer. And yeah, so thanks again for tuning in. I enjoyed today's session. I hope you learned something new. You saw something useful, and I would really love to welcome you once again here on our advanced course next week.